Hello, Mr. Vincent, Mr. Azmin, and Mr. Yang. Thank you for joining today's Speak Home webinar. And also, yeah, I think now it's just only Mr. Azmin and Mr. Yang. Thank you for joining today's Speak Home webinar. And also, yeah, I think now it's only. Sorry, for the echoing. Just now I forgot to mute the other channels. So today's this event not only will live on Zoom, not only we will sharing on during the Zoom, but we also will live on Facebook and YouTube. Welcome everyone for joining today's Speak Home webinar. For those who just joining our sessions, yeah. So just hope you guys yeah, another which will start at 8:30 sharp lah. So because we don't want to punish for someone that who punctual, right? So today 8:30 we will start sharp. Today what we are going to share is today our speaker is Mr. Novalu. He's a very experienced banking or financial practitioner, and also he have a very personal. He's also a very experienced investor. So today he's going to share with us about the key market movers and what is missing from your portfolio. So then, of course, today I hope everyone, if you follow the stock a bit, then you will notice that okay, today the Bursa Malaysia is not doing that well. But actually, as investors, right, we need to know as much as we can. We need to learn as much as we can in order to make the right decisions. So today, Mr. Novalu is very generous and he's well prepared. He's going to share with us about what kind of the black swan, okay, or the gray rhino that maybe we were missing out. So yeah, so today we are going to start this. So but before we start today's webinar, right? Okay, before we start today webinar, right? I'm going to share a very 2 minutes video. I'm going to share a 2 minutes video. Okay, I'm going to share a 2 minutes video. Then yeah, after this 2 minutes video, then perhaps 8:30 we will start. I will share a couple of video until 8:30. Then we will start today's webinar.
Hello, I am landlord. Hi, I am potential renter. And I am Speed Home. Wow, so cool. Editing only ma. Okay, so why should we use Speed Home? Why? Give me a reason. Fast. I'm very busy. I got meeting with Dato later, you know. Well, let's start with you first. Oh, okay. I'm interested to rent this guy's property. So can I take a look first? Oi. I where got time to go show my 10 properties to everyone. I only want to see one lah. Oh, sorry. Which one out of my 10 properties you want to see? No worries. We can arrange for our home runner to go to any of your 10 properties and take photos and videos and even arrange interviews for any potential renters like you. Or free. Free. Oh, okay. Then if I like the property, can I rent straight away? Whoa, wait. I need to know his background first. After he no job, cannot pay rent out. Hey, you think I know money? Don't worry. We will do a complete background check to make sure the tenant is eligible and you get a qualified tenant. I don't mind. Check lah. But how's the deposit? Is it 2 months? Yeah, the deposit. This is very important. After he damaged my property and ran away, how? Hey, you think all of us very bad, is it? You own 10 properties, then you know lah. Can you come closer a bit? I want to slap your face. Guys, there is no deposit. Huh? Wait, where can no deposit one? Simple. The tenant only needs to pass our zero deposit eligibility check and the landlord can sign up for the best insurance protection with Speed Home. Not bad, no deposit. Wait, what insurance is this? It's Allianz Insurance that protects your right as a landlord. So just 1.5 months rental for the whole year and Speed Home guarantees on-time rental payment, protection against rental loss, plus utility and household coverage. Oh, how much is the total coverage? Up to 42,000 ringgit. Wow, not bad. I can get money back. That means I can relax at home and you count him everything. Count him everything. Sign me up now. Me too. Great. Any other questions? Got free gift? Oh, we don't have any free gift. Can I give discount? Yeah, give free voucher lah. No free gift lah. But actually, you can advertise your property with us for free. And our insurance also has 60 days free cancellation. So no harm to try. Eh, can I give free umbrella?
Look at this Apple stock chart. And if the trader places a stop loss here, nope. How do we deal with all the trouble of viewing and all those? That's where our home runner comes in. Our home runner would show the house in selected Klang Valley areas, and then you don't have to go. We will collect the key from you. We'll show the house. It's everything all in one. That's how easy it is.
Hi, good evening, everyone. Welcome to Speed Home Ringgit Show. So thank you for being punctual and to join today's webinars. So right now we are not only friends on in our Zoom right now, but we also have our some of our friends on our Facebook and also YouTube. Thank you for supporting Speed Home Ringgit Hack Show. Hope you guys are all well. If you are the first time that who join our Speed Home, can you please type 1 to let me know you never heard Speed Home before and you never join? Yeah, just let me know. Just type 1 so that I will know you are our new friends. So other than that, yeah, if you join our Speed Home more than one time, then you can just type the time that you'll be attend. Then I will know that you are our old friends. Thank you so much. Today is the first day of November, right? So first day of November, actually today's our we are talking about investment. So today the Bursa Malaysia is not doing well because of the Maxmo Cukai Maxmo and also the others issues to impact the market quite badly. But overall, we need to know, right? Okay, sorry, I need to. Okay. So we saw some friends joining. Yeah. So overall, right, what we are going to today, we are very honored. We are invited a very experienced financial practitioner, Mr. Novalu. He will going to share us some his what we will miss when we from our portfolio. So he will share with us this kind of market insight, this kind of very interesting. But before that, okay, just let me share with you guys. If you those who already joined our Speed Home webinar before, then you will know, right? We always if you on our Facebook, you can just share our Facebook live to your friends and family. Let them also have a chance to watch, and also, yeah, a chance to win a book. Okay, we will give out a book, and also 2 fire blanket for as a lucky draw if you share our Facebook live. So I will take some airtime because this is a Speed Home event. So just bear with me for another 5 to 6 minutes. I will just very quickly to explain for those who really the first time that will join our Speed Home webinar. So who is Speed Home? Actually, we are the rental platform that will help the landlord to get a tenant to find a house. So you, as a landlord, you can post your property free on our website. And after that, if your property is within Klang Valley area, we will arrange house viewing for you. We will send someone to collect a key. That's that person, we call it home runner. The home runner will assist on the viewing, but this service we only provide you in the Klang Valley area. So after that, we will help the tenant. When the tenant view the house, they like the house, we will ask that we will do a tenant background check to check on the tenant's background, see is it that is like a potential they are good client, good payment master or not. Then after that, we will do a digital signing online. So basically, you don't need to meet your tenant. You can just find a tenant after you post a property, and we will help you arrange a house viewing, and we help you check the tenant, and the tenant pays the rental for the first month. Then that is done. We will do the rental collection also. So after the tenants, right, we check the background, the tenant signs a tenancy agreement. What we're going to do is we will help you to prepare tenancy agreement and buy you an insurance, and we will do a rental collections also. Okay, this is all included in our services. Okay, so so we used to call ourselves Speed Rent. Now we call ourselves Speed Home. We rebrand in 2019. So that time so we are right now we have more than 550 app downloads, 150K monthly traffic, and another 100K for the property listed, also another 600K for the tenant inquiries. So this is the numbers that we show to our landlords, okay, or tenants, right? Came to our website, yeah, very easily to get a house or get a tenant. So basically, if you search Speed Home in all the mainstream media, you will find we got the media coverage in all the mainstream media. So of course, one of our famous investors, okay, faith founders, Mr. Giuliano and 𝐿𝐶𝐿, they are one of our investors, and we also have a couple of the institutional investors such as IJM, Allianz, and also another venture capital fund, 𝐿𝐵 Partners. So during our launching day, right, we invited the former housing and the local government minister 𝐌𝐨𝐯𝐶𝐬 to be our guest of honor. So when I talk about what is so different from Speed Home compared to the other platform. So in Speed Home, right, we do provide better quality of tenants, and we have you can just chat with your tenants in our app directly, and our zero deposit policies, right, we will help you to rent out your house faster. And in the meanwhile, this zero deposit doesn't mention that you don't have any kind of protection. So the first one that the landlord pay to us, the zero deposit, we will buy the landlord an insurance to protect your house. So in the meanwhile, we help you to do the viewing arrangement and have a free rental collections. So when I talk about the zero deposit, some of the landlords get triggered. Why zero deposit? Is it zero deposit safe? So this zero deposits, right? Actually it's like it's a kind of the advantage and the weapon for the landlord to compete with their competitors. Why I'm saying that? Because this first thing is that they will help you maximize portfolio. There's no risk for you, and your house will always be the first choice, and you will rent out your house faster and 20 times better. So our home runners will help you to collect the key and also show the house. In our background check, right? If you are Malaysian, we will check their IC, employment letter, bank statement, credit scoring. If they are foreigners, we will ask their passport, employee offer letter, and bank statement. Of course, if there is foreign students, right, we will ask for more documentations and a few questions to ensure that is the tenants they able to afford and pay the rent punctually. So let me skip a couple of it. So this is our package, our insurance package. So what is our insurance package cover? So if this is a basic insurance package, right, it equivalent to the first month plus a 6% SST plus a 10 ringgit. That's it. We didn't charge you anything. Only this 1 month plus 6% SST plus this 10 ringgit. So the rental collections, right, is free. And if the tenants, they didn't pay rent more than 31 days and then they run away, we will pay the 80% for 2 months if they are basic package. And if they didn't pay the utility, you can claim upon 1,000. And if they have an accident damage of theft coverage, you can get upon 15,000. So the basic package total coverage can up to 24K. So the extended package, right? You will see the extended package. Definitely their total coverage is higher, but the extended package of extended plus, this is what I'm going to highlight. If the tenant didn't pay rent, we will pay the rent to the landlord first. If the tenant didn't move out and occupy the landlord house, which is overstay, we have the overstay defender. So the OCD we call. So this OCD will pay the rent until the tenant move out, or we apply a court order to evict the tenant. So this is the our ultimate package, Extended Plus, that what we provide. So yep. Okay. So the claim, maybe you're a bit afraid. It's like, okay, so the claim, is it very hassle? The insurance, I cannot trust the insurance, always that they can't claim. But actually, in the last 2 years, right, we already paid more than 200. Okay, we already pay out more than 200,000 for the insurance claim. And in the meanwhile, it only takes 3 to 7 days if your insurance claim is your insurance claim just is only for the what do you call that, the late rental and also the utilities. So if that is a big chunk amount, then maybe that will take more than 1 month. But usually if you just claim the late rental, the rental default and also the utilities is less than 1 month, less than 7 working days to finish the claim. So almost the end, just bear with me another 2 minutes. So this is our landlord community. Okay, we built a community, we call it Association of Landlord Malaysia. Right now, those who still stay with us, please screenshot and stay, and join the Facebook group later. You can ask any kind of questions with our landlord. And in Speed Home, we also create our Telegram channel. Yeah, this is our Telegram channel. So you can just, we will share the link in the comment sections later. And right now, okay, now this is some things that everyone need to be super alert. So if you never used Speed Home before, and you actually are the landlord and you are you feel very troublesome on collecting the rental, you need to remind the tenant. You always need to create your own invoice. You don't know when, how many months they pay already, the utility bills pay or not. Please, okay, sign up this form. So my colleague will share the form in the comment sections on Facebook, YouTube, and also in the Zoom. So later, what you guys just sign up the form and you will be on our list. Okay, you will be on our landlord waiting list once this rental management platform it launched. Okay, we will help you to do the rental collections and give you 80% of the management fee off by subscribe this platform. So this is something that we are going to launch in the near future. Okay, thank you so much, everyone. So I think today my sharing is just stop it here. So right now I'm going to invite our today guest, okay, Mr. Nova. So Mr. Nova, actually before thank you, Mr. Nova already switch on his camera. Before Mr. Nova take over the stage, let me just very quick introductions to Mr. Nova. Mr. Nova, actually, he's a very experienced financial practice. So what his job is, he's something that related, he's working in the banking industry and he's very experienced on investment. So Mr. Nova, he's a person who have a lot of experience on the investments. Okay, so later we all are I'm kind of excited because Mr. Nova, he came to our platform before to share about his others investments in a very early the MCO last year. So so I think today he will bring us a very exciting and very informative section. Thank you, Mr. Nova. Thank you so much. So Mr. Nova, let me set you as a host. So you can test, Ms. Nova, you can test mic.
Okay, let me just try. Okay.
I can hear you very clear.
Yeah, can you see my slide now?
Yes, I can see your screen.
Okay.
So everything is clear, the sound is clear. Okay, so I'll be here.
Okay, Ken. Hello, good evening, everyone. Thank you very much for being here, and also appreciate your time. And I think it's good that all of you have, share your evening time in order to learn a little bit more about how to improve your financial position and to learn a bit more about financial market. as I always think that the best thing to invest is in fact invest in yourself first, which is in your knowledge. So let's start my sharing here. So my sharing, there are 4 sessions. The first one is about myself, just to share some, to some extent, to build credibility about myself and just to let you know about who am I. Second thing is to look at the key market movers. What does it mean by key market movers? That means that when I look at the news in the market, what are the news that I pay attention to? What are the news that trigger my interest? Because there are a lot of noises in the market. So there could be 10 things in the market that everyone is talking about, but what are the 4 things that I always look at that really caught my attention? So I'm going to share about this thing to you. The third part is what is missing from your portfolio. By looking at the title, it means that there are potentially things that most investors doesn't have it, but it's in my own portfolio, which I feel that is something that is useful to share with everyone. Yeah. So that is the third part. And finally is my investment principle, which Lucy say that of all the investors and friends that I've met before, I would easily think that there is at least 2 key advice that I can share with everyone. So I hope that this sharing is useful for everyone. I always think is that very important when you make an investment decision, never make the decision based on advice on someone who has no interest in the outcome. What really means is that if you buy an investment advice, always ask yourself, is that person compensation scheme is in line with the outcome that you are expected? That means Lucy say is it a win-win situation? If you do well, he also do well. So I think that is a key thing that I always think about, especially when it comes to financial products. So if you feel that we have the same interest, and or at least we are on the same financial, potentially a same financial goal, you would like to get in touch with me, you can scan on the QR code that goes to one of my WhatsApp account. So this is just an example of a photo that I took during my hiking trip in Nepal. If you know, this place is called Annapurna Base Camp. So interesting fact about my trip was, I was in Annapurna Base Camp 5 years ago. I was hiking solo. Solo means no guide, no portal, and I hiked alone for 17 days in Nepal. So that's the interesting thing that I've done before recently. So let's quickly move into the key market movers. Like I said, there are many news in the market that so-called the voice in the market, but the 4 key things that I always look at. The first part is on the China regulation. Okay. The second thing is about energy crisis. The third one is COVID-19, and finally is about inflation. So if you ask me things like, oh, are you concerned about US-China trade war? My quick answer is that is not a key thing I look at now. If you ask me, is are you concerned about debt ceiling? Again, it's not in my top 4 concern. Are you concerned about example? Are you concerned about some so-called maybe some political issue? So again, those are not in my top 4. So these are the top 4 news that I will look at to make my own financial decision. The first one is on the China regulation. There are 4 key things that about the China regulation. The first one is about common prosperity. If you look at my slide, I don't put a lot of charts and graph and table. I hope that my sharing today is really a introduction for everyone, for you to really, instead of giving you the actual content, I hope that you can, the takeaway is when you wake up the next morning, when you look at the news, either in Bloomberg or Reuters or investing.com or wherever other media they look at, these are the 4 type of key news that at least I look at. Number 1 is, what are the changes in the China configuration? I think it's very important that we know the changes is there, but where is the direction heading to? If you ask me one of the key things, if I would like to summarize the whole story here, there are 2 key things that the Chinese government tries to achieve. Number 1 is being the largest economy in the near future, to overtake US as one of the largest economy in the world. And number two is how to achieve it. One of the key things that the Chinese government noticed is about growing the population. It's about the population power. So of course, you look at a lot of news in the market that talks about if you follow the news in China, there was a news about some celebrity being banned from China. Example, 𝐲𝐨 being deleted from the internet. The celebrities' income are being capped. They cannot earn more than a certain amount. And also, one of the issues that I find a little bit interesting is about, if you look at here, one of the photos is they say that all the CC celebrities are not allowed in China. If you look at it, of course, I find it a little bit weird, but they said that this type of celebrities will, to a certain extent, encourage, I put in my words, LGBT, homosexuality, which eventually will reduce the normal relationship where will impact the growth of the so-called normal population in China. Yeah. Then another thing that you look at is the common prosperity. Of course, we all hear about common prosperity, and we also concerned, people cannot get rich, cannot get so rich in China. Everything is being controlled by government. If you look at beyond the picture, it's very much about, because the income gap in China is huge. And a lot of people are very concerned about, if I have more children, they can't afford to have more children. If you remember those days that they say that, in China, you can only have one kid. If you have more, then you are being penalized. You need to pay penalty. But now the Chinese government is advocating 3-child policy. You can have 3 children, but no one wants to have 3 children because it's too expensive. So a lot of things that is being done in China is related to these two key things about being the strongest economy country, and number 2 is to grow the population. There are also a lot of things that's spoken about national securities. If you look at it, it's a little bit somewhat battle between US and China, but it's not about wanting to win something very personal against US, but it's more about they just want to be the strongest economy. That's all. So there are some company that was listed in US. If that is being delisted in US, no problem. Come back. Let's be listed in China now, and let's be listed in Hong Kong. And a lot of social pressure. If you notice, I noticed that not many people have heard about this term. At least 50% of the peer that I've spoken to, they haven't heard about this term. It's called 躺平. 躺平 in English means laying down, do nothing, not do nothing, do minimal. Don't get married, okay? Don't buy car, don't buy house, don't eat expensive food. Just live a very minimal lifestyle, so that they don't do stress. So these are all some of the social pressure or social issue in the market that also impact the growth in the Chinese population. So my long story short is that whatever new regulation that is introduced by China, look at it, the direction where they are going through, because there is always a sector that can benefit from that. For example, the impact of the China regulation, which eventually to grow more population, you have a great opportunity for consumerism story in China. Okay. And also because they acknowledge the problem of the aging of population in China, there is also potential so-called demand or opportunity to invest into a sector that is in line with the aging population. Example, maybe adult diapers. I'm just giving you one example. So long story short is this is one of the key things that I always look at. When there is any announcement about changes in China, I always look at it and I try to think beyond what the Chinese government is trying to do and what are the sectors that can benefit from there. Because investment is dynamic. Fund manager will change their strategy in line with the Chinese regulation to benefit from that regulation. And what I noticed is that when China want to move something, they are very serious about doing it. And they really want to make sure that they achieve it. As long as you are swimming along with the tide, you can make money from this investment. So that is the first market mover I look at. The second market mover I look at is about energy crisis. Loosely say it's about China also. Again, I noticed that not too many people talks about this part, and I also noticed that not too much of attention given about the energy crisis. Although I loosely mentioned it's in China, but actually it's a global issue because of the energy crisis or awareness about to use more clean energy. You notice that energy price has spiked up, despite crude oil price also has spiked up. But there is a lot of demand and discussion about moving towards new energy, cleaner energy. Not only China, but a lot of countries is saying that they want to go through carbon neutral. So China says that they want to go carbon neutral by year 2016. And in fact, it's not a new thing already. In fact, past few years, I do notice that some of the European countries also say that by a certain year, all the car will be electronic car already, and US also have the same thing. So it seems like the world are very concerned about the usage of energy. So that somewhat disrupt the traditional energy sector in the market. And to make things worse, especially now, we are towards the end of the year where a lot of countries entering into winter time. So they are at a time where winter is coming and energy is insufficient. So something that I really noticed is that there is a huge impact of the global supply in the market, at least in the next 1 to 2 quarters. So try to think about how does it impact certain sector? How does it impact delivery of, example, chips? How does it impact the pipeline of Apple product? How does it impact pipeline of the semicon? How does it impact the world's largest manufacturer, that is China? In the situation where economy have picked up, there is lack of energy, and some of the manufacturing plant have to shut down. How does it impact our life? What are the things that price will move up? So this is one of the key things that is always triggering in my mind. Whenever I see news related to energy crisis, I pay a lot of attention to understand, based on this news, what is the direction that I have to go through in order to make money in the right sector. So this is the second market mover. Again, like I said, I'm not giving you the actual answer. I'm just explaining to you what are the factors that I look at. But if you want a quick answer, of course, one of the key things that I always like to look at is EV, electric vehicles. So of course, the EV share price have moved up a lot, but there are a lot of discussion to say that why not go for company who supply a component to EV. So these are just examples. But I'm sure that EV is beyond just the hardware. EV can be about AI. It can be company who offers the surveillance camera. It can be company who offer the software for EV vehicles. There are many things that is possible to happen. This is just one example. So that is the second market mover. I personally invested into one energy fund, not listed in Malaysia, and it has done extremely well. So energy is one of the key things that I look at. The third thing is on COVID-19. I did write here COVID-19 plus plus. In fact, it could be COVID-19 plus plus plus. Why do I say that? If you look at, this is the global new cases for COVID-19. I do notice that it seems like there is no real ending in COVID-19. There is always new variant. The key thing that most people talk about, of course, is Delta. Then there are also variant that people talk about, Lambda. There are African variant, there are UK variant, there are India variant. So there's many different variants in the market. And I noticed that the scary part about COVID-19 is that it can infect it can infect animal. And when it infect animal, the animal can transfer it back to human again. And they actually found out that even the wild animal in the jungle also have COVID-19. Unless they come to a stage that all living creatures can be vaccinated, and to be vaccinated every year, if not, we almost see no ending in COVID-19. So I always feel that COVID-19, we are not at the end curve of the COVID-19. Perhaps we are maybe we are not even halfway through the end of COVID-19. So one good example was Israel. So I instead of tracking what's the new cases in US or Europe or in Malaysia or Singapore, I always look at the cases in Israel. Why? Because they are rich and they are willing to do vaccination. They are the first country who are not fully, but highly vaccinated. And in September, they have the highest COVID-19 cases ever. Although by now the COVID-19 cases has come down, it actually really triggered me to see the trend. Where is it heading to? Is it very possible that we need to take a jab every year moving forward? By looking at what's happening in all these so-called pioneer country, it seems like it is. And Yashu explains to me also that what is our lifestyle moving forward in future. I always try to imagine what will happen a year later, 2 years later, 3 years later. Will I be working in my base city? When I say base city, is okay, my office is in KL. So how frequent would I stay in KL compared to in my hometown? I come from Ipoh. So would it be 50-50? It does trigger me this thinking. Would I need a permanent house in KL moving forward in future? 3 years down the road, 5 years down the road? And recently I went to watch a movie in cinema. Actually, I'm very, very surprised. It's extremely quiet. Extremely quiet. So I imagine what is GSC thinking now? Are they very concerned? Because this type of cinema operator took over another operator and end up they noticed that there is not a lot of demand. That's just my observation. We have adopted a new lifestyle. Example, watching online video streaming. Just example, Netflix is so popular, and this type of show you don't even see in the cinema. So how would the lifestyle looks like in future? How would we interact with everyone in future? Are we going to dine out more frequent? Or is it more common to dine in already? Invite friends to your house instead of going to a restaurant. So my key message to you is that I always try to observe trends due to COVID-19. And I observe trend that is non-reversible. That means if someday COVID-19 is non-material, would this trend reverse or not? I just quote an example just now on Netflix. Although some of my friends will say that, they don't think that cinema will ever close down, but which I also agree. But I would really, really think that online streaming, video streaming has stopped away a huge chunk of the market share from cinema, which is to a certain extent this trend is irreversible if you ask me. Even packed food, e-hailing, it took away a huge chunk of the market share. That the behavior is also irreversible. So I always think about what are the things that or lifestyle that will change moving forward in future. So this is the third so-called mover or things that I observe. The fourth one is on inflation. Of course, what usually we look at headline is that, there's an inflation fear in US, there's an inflation fear in Europe, or potentially inflation fear in Malaysia, then market collapse. I think we are a little bit too focused on headline. We only look at, inflation fear, market drop. But usually I ask this question. First of all, who has inflation fear? Is it everyone? Is it just US? Does Malaysia have inflation fear? So if the question is yes, then what type of things prices will go up? Is it labor cost will go up? Is it the construction price will go up? Is it the food price will go up? It just trigger me because I want to know which are the sectors that I want to go in. Which are the sectors that I should be investing in? Something that I find it very interesting, especially on property price. Property price in US gone up. Property price in Australia went up. In Singapore went up. In China went up. But in Malaysia it came down. So I try to find out also, what's the reason behind? Why doesn't the property prices in Malaysia go up? Of course, it's easy to say, because of demand and supply equation, then the property price doesn't move up or down. But what about looking beyond that? I think the beauty or what differentiates a successful investor is looking at areas or factors that other people don't see. Of course, everyone will tell you the same thing. Supply is too high, property price go down. You ask 100 investors, 100 investors can tell you the same thing. So by using the same information, you want to outperform the other investor, it's not possible. You need to know additional investor. The 99% of the investor doesn't know about this information. So what is the real factor? What are things that we look at that will drive the property price go higher? I just give you my view. I would think it's government policy. Recently, they have loosened the policy on property-related industry. They have uplift the requirement to pay for RPGT for property more than 5 years. So this is one thing. Would that be more easing policy in the future? So if you ask me again, like I said, demand and supply, everyone knows about it. It doesn't give you a cutting edge advantage to know this information because everyone knows it. But what else that you doesn't know? That if you know it, then you benefit yourself. A lot of discussion about whether inflation is transitionary. To loosely say, transitionary means is that a lot of analysts will agree that inflation is real, but it's only temporary. But if you ask me, I think it's real, but I wouldn't say it's temporary. Potentially, it can last 1 to 2 years time down the road. And what would impact the interest rate direction then? A lot of economists forecast interest rate will potentially only up by 0.25% per annum for the next 2 to 3 years. That is everyone know. Everyone know about this information. If you are part of the 99% of the investor who know this information, how does it give you a cutting edge advantage then? How would you beat the rest of the investor to make money? Yeah, so always, these are the few things these are the 4 key movers that always in my mind that I look at to identify the key direction where I want to invest. Okay. The second part I want to share is some of the investment ideas. Again, like I said, this part is about what's missing in your portfolio. When I say what is missing in your portfolio means that your core holding you already know. Your common things, all your bond, your global equity, or some of the dividend stocks, you already know. These are the common things. What are the uncommon things that may not be in your portfolio, but is in my portfolio? I personally hold this kind of products. Not a lot. It's just a kicker in the portfolio that motivates some excess return. In the financial term, we call it alpha. I try to put it down in 3 main so-called ideas that you can look at. The first thing is you can look at from the geographical direction. That means what are the countries that you have not invested before that it should be in your portfolio or you can be considered in your portfolio. I put it loosely CII, which later I'm explaining to you what is CII. The second way to look at it is, okay, let's not look at it in the geographical perspective, but look at it in the sector perspective. What would you want to invest in? What are sector? Example, most people will talk about technology. Remember I told you, I'm trying to give you things that is not in your portfolio. I'm sure in your portfolio already got technology. Most people who are invested already have technology. Some people will ask me about energy, which I told you that yes, I also bought it. Quite common that I also hear investors ask me about energy. But something that I noticed that not many people have in their portfolio is financial sector, that is a second idea. And third perspective I look at is from the strategy perspective. Many investors you ask, oh, big cap and small cap, which one better? Should I buy dividend stocks? So these are different type of investment strategy. But what about ESG? Have you ever think about the ESG concept? Again, like I said, I'm just trying to give you some new idea in portfolio. I hope it can somewhat spark some interest for you to start looking for the solution. I always tell my investor is that what matters in your portfolio is not just what you put into your portfolio, but it's also about what you want to take out from your portfolio. I noticed that a lot of investors, they just buy, invest. Some of the portfolio or fund that doesn't do well, maybe the cycle is over, but still in your portfolio. So a lot of investors refuse to clean up their portfolio. So it's important to also take out what you didn't want in your portfolio. In fact, that is always the first thing that I do. When I look at the client portfolio, the first thing I look at is, okay, this fund exit, this one exit, this one exit, this one exit. Then only I think about what else I want to put it in back. So I noticed that not many people talk about this part. So what matters is also what to take out from the portfolio. CII. CII actually means China, India, Indonesia. If you have been investing into emerging market for a long time, you might have heard of the investment term called BRIC, B-R-I-C, Brazil, Russia, India, and China. At least two of the country is still valid, China and India. And the third one that you might want to add in your portfolio is Indonesia. Okay, but about China, I just want to give a little bit of differentiation. Of course, the China market has not done very well this year. When I share with investors, hey, let's invest in China, they say, oh no China. Maybe I try to give you a different perspective. Like I started the conversation earlier, what is missing in your portfolio is investing into a onshore China. If you're looking at the chart here, the orange color represents the performance of the FTSE China F50, which is the China onshore market. Compared to the Hang Seng China Enterprise, we call it the offshore China market. In the past 10 years, the onshore market is up by 90%, but the offshore market is negative 15%. So the alpha, the difference of the performance is more than 100% different. But do you know that most investors does not have exposure in onshore? Don't even know what is onshore. What is onshore? Onshore means investing into a fund where the underlying are stocks listed in Shanghai and Shenzhen. Example, Shanghai and Shenzhen. Most of the Chinese equity fund that you have in your portfolio are investing into, example, stock listed in Hong Kong, stock listed in US, Chinese stock listed in US, or potentially also loosely say Chinese stock are listed in Taiwan. These are the very common offshore Chinese equity, but onshore Chinese equity is actually very rare. Just to give you a perspective, every $5 invested in the market, $4 go to the offshore, only $1 go to onshore. This is the Malaysia's investor profile. So there is actually very little awareness about onshore. So why do I like onshore is because I think there is a very low entry point. Although you might disagree to say that, hey, just now you just show me a chart that it looks it has done better than offshore. But bear in mind that if you compare onshore, which is a much bigger market, to the like of the largest economy, which is US, S&P 500 or NASDAQ, China Asia market is far below what S&P 500 and NASDAQ has achieved. So I feel that Chinese equity market onshore is not very expensive for now at least. And I also feel that it's one of the market that is very underexposed for a lot of investors. A lot of investors don't have exposure. And I think that there is still a lot of stories about growth in the China market, including the onshore market that includes like the electric vehicles, semicon industry, and also the 5G introduction in China. I think these are the key things that is somewhat missing in the market. And a lot of onshore market is very focused into sectors that are related to consumerism. I just quote you one example. It may not be the best example. A little bit concerned to mention this, but most of it is also member in this group. Liquor industry. Your 𝐼𝐴, example like 𝐼𝐴. Really huge and big industry in China where you don't see in the offshore market. All the 𝐼𝐴 sectors. I'm not advocating to say this sector is good. I'm just trying to say that this sector hardly exists in the offshore market. And also a lot of huge aging population story about the Chinese equity market. The second one is about India. I feel that as an Asian investor, to a certain extent, I remember I saw this joke. If you know this stand-up comedian, say Peter Russell. Say, hey, Asian, what does it mean by Asian? They always imagine that Asian is Chinese, but Indian is also Asian. So I remember many years back when we talk about India equity market, most people is not very interested. They will say that, hey, no, India will not be as strong as China, will never be as strong as China. I think by now it's proven that this statement is wrong. So in about 3 years down the road, India is potentially become the 5th largest equity market, means share market in the world. They are going to overtake the German equity market to be the 5th largest equity market in 5 years down the road. And I feel that India is at an extremely early curve of the technology cycle. From what you have seen in China, cycle or trend that have created so many millionaire and billionaire in China. In India, they are at the early curve of that, including things like food delivery, online payment, right e-hailing, and e-commerce. I'm not saying that this thing doesn't exist in India, but comparing to where China is, India is considered at the early curve. I feel that it's lacking in most investor portfolio. And third one is Indonesia. Because of the disruption due to COVID-19, there is a huge impact of the shortage of labor supply. So Indonesia doesn't have this problem. So there is, because of the inflation, country that has a huge supply of the commodity will also benefit. And Indonesia is in the ASEAN market, one of the market that has recently so-called emerged from the improving COVID-19 situation. And if you look at it, all the 3 countries that I've spoken about have one similarity, that is population: China, India, and Indonesia. India, I can't say that it's a new kids on the block anymore, because their market has, this year has done very well. Best performing equity market for the year, but Indonesia have not. So something that I feel that is still extremely early curve. If you can have that some exposure in your client's portfolio, in your own portfolio. The second one is on the financial sector. Remember, I was talking about inflation and about interest rate hike. Almost everyone agrees that interest rate is going to move up. So it's something that we can't stop it. But if you know interest rate is going to move up, where should you invest? Wouldn't you want to invest in areas that benefit from higher interest rate? I tried to talk to a few peers, which I noticed that there are people who doesn't somewhat agree with the so-called investment into financial sectors, but I have a different view. So this is, again, today's sharing is all my, consider my personal view also. Because it's, first of all, this is an old sector, traditional sector, strong backbone of the economy, somewhat so-called income, we wouldn't call it growth-based, because these are industry that is well established already. Yeah. And they benefit from higher interest rate. If you jointly believe that inflation is going to happen, when inflation happens, interest rate is going to move up. And the most direct sector that will benefit from higher interest rate is financial sectors. So some of the areas that you can look at. And of course, I also like a lot of stories about fintech. Fintech is the growth leg of the financial sectors. Whoever that manages their risk well, and also have an adoption into financial sector, those are the type of company or areas that you want to look at. So which I personally like financial sectors. And the third one is the ESG concept. I chose to share this idea because I noticed that there is not a lot of awareness about ESG. So ESG means environment, social, and governance. So there are a few reasons why this concept of ESG investing started, mainly because of the environment issue, population issue, poverty, hunger. Where what happened was that United Nations, they state 17 sustainable development goals. 1, 2, 3, 4, 5, 6 until 17. So apparently I noticed that a lot of fund managers is looking towards this direction. And I noticed that a lot of countries, even the big countries, are very serious about achieving they call it SDG, Sustainable Development Goals, the 17 SDG. A lot of countries are very serious about this. So there are discussions to say that its potential $90 trillion US will be invested in company that is involved in achieving the 17 SDGs. And United Nations expect that all the SDG, Sustainable Development Goals, will be fully implemented in the next 9 years. Just 9 years, is going to be full impact, implemented. So I feel that we are at the right timing to go into any story that is related to ESG. If you feel that ESG is not so important, then you may want to think twice. I used to have the same thinking also. ESG, does people really care about ESG? Is this so important? So if you look at what has hit some of the local stocks, then you know. I used to think, oh, foreign labor is very common. A lot of companies use foreign labor. But if you look at what happened to some of the company measure, then you know, oh, okay, it is important. Company who doesn't follow, so to speak, all these ESG elements are also so-called penalized. Share price penalized, product being whole at the pot. Of course, there are many reasons why this company share price go down. But I'm just trying to point out is that it is an important element that you may want to look at and to have some exposure in your current portfolio. That is my third part. Due to interest of time, actually, I have just another 2 key things to share about. So actually, I quite like this message. Jeff Bezos actually asked Warren Buffett, and they said that, hey, Warren Buffett, you are a good investor, and your investing strategy is so simple. Why doesn't everyone just copy your strategy? And Warren Buffett says that, yeah, it's simple, but because no one wants to get rich slowly. Of most of the investors that I have met so far, a lot of them, when we first met, I said, oh yeah, I have a 5-year, I have a 3-year to 5-year so-called investment horizon. But in reality, 3 months later, they already nag. I was like, oh yeah, market is not doing well. I'm very nervous. I need to see return. Although initially they started to say that they actually have a 3-year horizon. For most investors, from my experience, what I mean is their investment horizon is very long. So I advise that try to look at things beyond the short term. That's a key message. There are 2 very important principles that I always tell myself, continue to remind myself again and again. The first principle is that, which is actually very useful for me. I always tell myself, when the fact change, I change my mind. So what happened is that this is the message, the key thing said by 𝐿𝐸𝐭𝐞𝐧𝐭. So that he is one of the important economists in US that bring US out of the so-called the Great Depression. So when he shared about his ideas in the economy, so someone actually come and challenge him, said, hey, you just said this some time ago. Now you change your mind. Why do you always change your mind? And 𝐿𝐸𝐭𝐞𝐧𝐭 says that because the fact has changed. The fact changed, therefore I changed my mind. What do you do, sir? Which when I look at it, I feel more comfortable to say that if there is change in the factual information in the market and you change your mind, don't feel afraid to admit that because information has changed. This is a very common investor behavior cycle that we look at. If you ask me, this is not a very important chart. Most of you have seen this before. It only tells you where is the stage of the financial behavior you are, but it doesn't explain why do you behave like that. So this is a more important chart, not chart, I mean a table to explain the investor behavior. One of the things that I notice is anchoring behavior. A lot of times that investor refuse to accept or agree some of the mistakes that they have made. So for me, like I said, when the fact changed, I changed my mind. Okay, I just quote 3 examples that I have I experienced personally. During the Japan tsunami, I can't remember exactly which year was that. I went in big time into Japan equities. Big time means a huge exposure in my portfolio was in Japan. But I do not see a material turnaround in the situation in the Japanese equity at that time. So I just cut loss and move on and go to something else. So it was a painful impact to my portfolio. It came down, but not so hard also. But I'm just trying to say that if the fact changed, I changed my mind. I used to be just okay about technology. I used to be just okay about all this augmented reality, what you see about Facebook now. But I started to change my mind quite a bit. I used to not accept things like Netflix, but because COVID-19, I changed my mind. It's okay because the factual information had changed. I'm sure a lot of you also holding exposure into this kind of healthcare stocks. I also changed my mind. So don't be afraid to admit that the factual information will have changed. Don't anchor to one old belief that eventually you just suffer and not able to move on. If you trust that there is enough evidence that you should move on and do something else, then just change it. If you need to cut loss, then just cut loss. Remember what I told you just now, it's not about what to put in the portfolio, but also what to take out from the portfolio. That has been one very important principle in my investing life. So I'm not afraid to tell people that I've changed my mind. A lot of investors say, oh, last time you said this, yeah, that's last time. But now information has changed. I changed my mind. Second thing that I noticed is know what you own and why you own it. It's actually said by Peter Lynch, one of the great investors in US. How great is Peter Lynch is that his investment portfolio is up by 29.2% per annum, which is double of the S&P 500 performance. And we all know the US market is very difficult to beat. He beat the index by double. When he started, his investment AUM was 18 million. In 13 years, the AUM grew to 14 billion US dollars. And he also uphold the best 20-year performance ever. The fund that he managed up to year 2003, which I find this very important. A lot of investors, when I meet them, they say, oh, I don't want to invest because I lost money. And when I ask them, so what exactly do you buy? I noticed that they always say that, I also don't know what fund. Like my RM asked me to buy that fund, but I actually don't know what fund is that. That's the problem. The investor doesn't even know what they buy. I feel that this is a very dangerous situation. I wanted to share a table that, I'm going to share it still, but I just find it maybe a bit lengthy here. Just some sharing to everyone how does it looks like. This is the very basic, for me it's very basic already. This is the example of the portfolio of funds in the market. So what I usually look at is that to understand what I'm holding in my portfolio, you need to read the right columns. So first of all, I want to know what are the total exposure I have. In this scenario is 1 million, but this is just an example portfolio. The second thing that I always look at is that what is my broad asset class exposure? I'm able to identify, you need to be able to identify which fund is equity fund, which one is mixed asset, which one is fixed income. I just give you an example. Okay, like actually Asian income is mixed asset, or Maybank 𝐷𝐸 is a mixed asset fund, or money market is considered a fixed income fund. Okay. Then the next thing that I do, this is what I do for my exercise that I do for my portfolio, but this is not my fund. I don't have 1 million cash in my fund. I just give you one example. Then I break down by 3 or 4 key regions that I look at. Number one is I want to know what are the areas in emerging market, in local market, in the developed market, and in a sectorial fund. I try to calculate their percentage exposure. And then I will do the calculation to understand what exactly exposure do I have in different type of sectors. So this is example of the most basic things that I ever do for my investment portfolio. So if you can't even break down, exactly my portfolio has how much equity, or how much exposure in mixed asset, or how much exposure in fixed income, this is the bare minimum things that everyone should know for your portfolio. Yeah. So that's the last message that I have. So I just want to end up to say again is that it is very important to know that what you have in your portfolio, and you know exactly why you want to have it. So you can, if you have any question, you can put it in the Q&A box. And if you want to get in touch with me, you can scan on the QR code. So any question that anyone want to ask?
Okay, Mr. Nova, I will reclaim the host.
Yeah.
So yeah, so I already reclaim the host. So guys, yeah, I think anyone, if you want to just have any questions, right, you can just type on the comment section. But in the meanwhile, I think that they still digesting like what are you saying, they're still thinking. So while our audience is typing or thinking like what kind of question they want to ask, so I'll play another 2-minute videos so to let everyone's have some time to type lah. Okay, so let me share my screen right now. So I will stop your screen,
Okay.
Mr. Nova. Yep. So yep, I'll share the screen and then everyone can see my screen, right? So let me play this another video while all our audience on Facebook, YouTube, you also can type your questions on the comment box. Then later we will compile all the questions and we will answer one by one.
My life, I work very hard. I take good care of my family. I have very good friends, and I pay my taxes. My life is pretty good. You interrupt my narration. Must be about my rental property. Hello, Megan. Huh? Oh, Megan. Hey, how's my property? Huh? Tenant run away. Got property damage. 40,000 to repair. Why I didn't have protection for my rental property? Darling. I am pregnant. Are you sure? Why got 5 red lines one? That means really confirm pregnant. Why I didn't use protection? Hey darling, you can't die yet. You don't have life insurance. Why I didn't buy more protection? It's okay, darling. Let's focus on the baby first. I hope it's a boy. You like? I'm too old for this. Darling! No! Become ghost already. And how come I'm wearing this shirt? I forgot to tell you about our sponsor today, Speed Home. So I know you already have insurance protection for your life, protection for your little brother, but why not have landlord insurance protection for your rentals with Speed Home? Get yourself covered when your tenants run away or when there's damage to your property. So make sure to check out Speed Home, okay? I go help my wife. Bye-bye.
Okay, so I just finished playing a very funny, chill video. So there's this couple of questions. Our friend Edmund in our Zoom, he asked the questions. So couple of questions. Just give me another 2-3 seconds. I'm compiling everyone. Okay. So come back. Okay. Mr. Nova?
Should I still share my video or I just off it, is it?
No, I think you can switch on your video. Everyone.
I cannot start the video.
Oh, I know what's the okay, let me okay, let me check the moving allowed to record. Okay, I make you as a host already. Now you can switch on. Okay. Okay, no problem. So Mr. Nova, our first questions, right? What we one of our friends asking is the cutting loss is a very important practice while you are as an investor. Can you just share with us, right, one of your most painful cutting loss experience? So and how do you do it? Like how many percent?
Of course, the most painful thing about cutting loss, I mean, at the point that you cut loss, you already know how much you lost. Let's say I invested into Japan and down by 20%. So I cut loss. By the time I cut loss, I already know this is going to happen. But the painful thing is that after you cut loss, then you rebound. Then it rebound 20, 30, 50%. So of course that is the, so to speak, the painful experience. Remember just now I showed one of the table, the when I show the investor cycle, then I show a pie chart. So I told everyone is that actually that is the more important chart that everyone wants to look at. If you look at the chart, I believe there is one thing there called is loss adverse. So I always ask this question: are you risk adverse? Risk adverse means that are you someone who doesn't want to take risk? Oh, investor, you come to say that, oh, I'm very conservative one. I cannot take risk one. But you notice the investor who cannot take risk is willing to add money, buy more and more and more and more, keep digging into the sector that he is losing money, just to hope someday it can recover and break even. Not recover and make money, recover and break even. So I urge everyone is that if from the factual information that you have already tell you that you need to move on, then just cut. Don't have this perspective is I cannot afford to move on. I say that the loss adverse mentality. So that's the thing that I think everyone should avoid.
True. As a response, right, I think a lot of the people, especially investors on the healthcare sector, they feel this kind of feelings. They thought like, okay, this is a rebound, then try to invest more, just exactly the thing. And then every time when I switch on the app, one of the most active stock investment app in Malaysia, then you will see a lot of interesting comment, or you just go to the iTrade Investor, then you will see a lot of debate happening there. So yeah, exactly they have this kind of habit, and yeah, exactly that Mr. Nova that he mentioned. So that we have two audience, right, ask the same questions. Guess what? They are asking about crypto.
I personally I have some exposure in crypto, but actually very minor. I do acknowledge that the hype about crypto, and honestly, remember just now I mentioned about changing my mind. I used to not touch crypto at all. But I gradually opened my mind to say that, okay, maybe I should try some. But to be honest, my exposure is extremely small, extremely small. I personally feel that we are still at the early curve of the so-called the crypto cycle. That's just my view. So I will always think that to gain some exposure, even a slightest exposure in crypto, in my view, is not about making money. It's about gaining experience. So if you want to take a step to go into crypto, I advise everyone go in with the mentality to say I want to learn something new. A lot of investors who goes into crypto may not even know the technology behind. Maybe they can't even know what is blockchain. So hey, what is blockchain? What is crypto mining? What do they do? So what are the things that is required to mine cryptocurrency? Why NVIDIA share price will move up? So I advise that take it as a step to gain some knowledge or experience in crypto. But my long story short is that my exposure in crypto is very minor. I'm also at the learning curve to understand about this thing. But my advice is, like I said, try to look beyond crypto. Try to understand. There are two keywords that you need to look at. One is blockchain. Try to Google this term. Another one is NFT.
NFT, yes. One of the buzzwords.
So don't too focus only on crypto, but understand these two key terms, blockchain and NFT. Then it give you a better idea, the whole picture. What are the future direction is going to move on to?
Okay, so we get to the next questions. So what's your view on the Malaysia budget 2022? I'm not sure, Mr. Nova, is it that is the topic that really related to?
I can just go very high level on this one.
Yes.
I think sometimes there are two things that I try to do. The first thing is that if I look at the topic, I try to do some research. If I feel to get more information, I look at the market impact. What do I mean? So someone will call me and say that, oh, Nova, like US announced this, China said this, what do you think? So the first direction you want to look at is look at the market reaction. Yeah. So example, budget has been announced and look at what happened to Malaysian market today. Malaysian market was down. If you want to say that it's down a lot, honestly, I don't feel that it's down a lot yet. So that is very, very surface. It's down by 2%. I was thinking that it can go even more. The next thing you want to look at is also the foreign fund flow. Do you now begin to see a outflow? So my advice to you is that more important is not just what you think, and more important is what is everyone thinking, because your 100,000 and your 1 million cannot save the whole market. You want to know, is it everyone thinking the same thing? The long story short is that it doesn't appear that the investor is impressed by the budget 2022. So I'm somewhat in line with the market sentiment. Yeah.
Okay, so we came to the next questions. I think this also can be also very wide. What is the lacking in the unit trust industry in Malaysia?
What is lacking in the industry?
I think I guess performance. Like some of them they think that the performance of the unit trust is not good.
Actually, if you ask me, one of the key driver, in fact, if you ask me in the industry, is investor education. So, sorry to say this, like investor education, because I from the industry, there are a lot of funds that we want to launch in the market, but we notice that investor is not ready. When the investor look at it, they say, "Hey, what fund is this? Like, I don't understand." So, okay, don't invest. See how. And there are a lot of comments to say that, oh, new fund, I don't invest. Why? Because the IOP fund, first month sure lose money one. There are a lot of myths and things that is said by the investor in the industry that I feel that there is not enough education in the market. And actually it's both ways. So the issue is why is it lacking? Is it the person who's supposed to give education is not sufficient? But if you ask me, instead of saying that, oh, the financial institute should have done this, we should have this technology. If you ask me, the key thing that really, the key survival tool for an investor is your own knowledge. You know what you want already. In the market, there are enough product in the market. If not in the Malaysian market, you can find somewhere else. But it's the lack of knowledge. The example, the table I showed you just now, most of my friends, when I show to them, they don't even know what I'm trying to calculate. When I send some research report to my friend, they say that, hey, what's the conclusion? I said that, hey, I sent you the report already. The report is in English. He told me he understands every word in the report, but when you combine together, he don't understand the whole report. No conclusion. He cannot understand it. So I feel that that we still have a long way to go for investor education.
Okay. Just now, just to be share with you something. Like when you send to someone, people don't want to read the thing, we will put a very short form, TLTR, too long to read.
Too long.
TLTR. This is something like the young generations. Like when I talk with my 20 something colleague, that they will respond to me TLTR.
Long to read. Okay.
Too long to read. Okay. So we come back to the next questions. Do you think that about the insurance-linked product as a type of investment? This is also a very good question. Actually, I think this.
So just now I did mention also that I have quite some interest in personal finance. So I just want to tell you that because I don't cover insurance product, so maybe my answer is a little bit biased. But my own principle is if you understand the market well enough, if you are considered a experienced investor, buy term insurance and invest the rest. So I do encourage some of my friends or peers to go for investment link. For people, there are two reasons why they go for investment link. Number one is they need the forced saving. I think the forced saving element is important in investment link. The second element is because they have little so-called understanding or knowledge about investment product. Therefore you go for investment link. If you are the type of investor that you know what you're doing and you don't need people to force you to save, then you should do it on your own. Buy them and invest the rest.
So for me, it's like I think the investment linked insurance, right? They are more like a protection because the premium that you pay is not enough to cover the fee. So you go for the investment link in order to get a higher coverage. But from a buyer perspective, like also because I also buy some investment link, but I won't see it as an investment rather because it's just like insurance is insurance. So yeah. So come back to the next questions. So this is very funny. Our one of the seven. We have a more detailed investment talk. I sure it's like you want to ask number.
I think since we are in the Speed Home, honestly, I have known the management team for Speed Home for a long time. I really think that the team has done a really good job. If there is demand for a more so-called technical series of investment talk, maybe Speed Home can organize more in future. Of course, we can share more to investors.
True. But perhaps if we want to go with this, then we should arrange another more it's like intermediate because this today is like the topic that Mr. Nova shared. It's more like a concept or what kind of the principle or attitude that you should have when you are involved in investing, because a lot of in especially in these years, a lot of the Malaysian, we have a lot of retail investors. Suddenly in 1 year increase 20 to 30%. Then a lot of them, they don't have this kind of the knowledge. So that's why Mr. Nova is like trying to share with his practice. But I have one question for myself. So just want to ask Mr. Nova, right? I know, right, you have exposures on the others equity in the others country. So what kind of the tools like that you use to invest? Is like unit trust or you own an account from the other banks to invest? What kind of the tools you recommend? Because a lot of people, they think like the charges of the fee is very high. Then some of them, right now when we saw on our Facebook, we saw a lot of the different equity apps. Then I don't know, can you just share with us some of your experience on this?
Of course, we always hear a lot about people who invest in shares, then they make a lot of money. People who invest in crypto and make a lot of money. My quick advice is personally, main of my listed instrument exposure is in unit trust. I go through some online platform to trade it. I have very minor exposure into direct equity. The reason is because I eventually noticed that I tried before. I trade CFD before, I trade currency before, I trade equity before, but I find that it doesn't help me so much because that is not my area of expertise. So whenever I come across someone who say that, oh, I don't buy unit trust because share market can do better, I never argue and say, if you know, then you do. Most important is know what you're doing. You can do well in currency if you know it. You can do well in CFD if you know what you're doing. So find something that you really understand. So that's why when I started about my profile, I did mention that my key expertise is unit trust. There are people who feel that, oh, unit trust, maybe it won't last long, but I beg to differ. Unit trust is just a vehicle. The thing that changed is the strategy and the delivery platform will change. So unit trust itself is just a SPV, just a special purpose vehicle. What to change is the way it's being sold to the investor, and secondly, the strategy behind the SPV should change. So my expertise is in this area. So to answer your question, my main exposure is still unit trust.
I see. Okay. Noted. Unit trust. Okay. So I think just let me do a last checking. See, did I miss any other audience? If not, I think today's we can just call it as almost the end of our webinar. Okay. So Mr. Nova, thank you for your time, for your precious time, and also sharing the very practical and also very easy to understand to what kind of the practice that we should have, and what are we missing in our portfolio, what we are doing. We think like others normals the normal investors, but we never think about like how can we like encrypt the kind of the information that we get every day, and then we get out we have our own strategy. So thank you, Mr. Nova, that came to our platforms like Speed Home Ringgit Hack Show to share with our audience.
Thank you. Thank you very much for everyone. Thanks for inviting me.
Yeah. So guys, those who are still with us, don't forget, if you have never used Speed Home before, click on our our Speed Home, the link that I share. We will provide soon. We are going to launch our Speed Home property management platform. You can just click on the link and to join our waiting list, and you stand a chance, and then you will get an 80% discount for the list. Okay, if you after you sign up our waiting list. Okay, thank you so much, everyone. Take care and have a good rest.
Thank
Bye
you.
bye.